The U.S. housing market is facing a new challenge: soaring mortgage rates. Last week, rates surpassed 7%, the highest level since May of last year. This surge has caught the attention of economists and potential homebuyers alike. The question on everyone's mind is simple: why are rates rising so rapidly? For much of the past year, rates hovered around 6%, providing a brief window of opportunity for some buyers. However, that window appears to be closing. Potential home buyers are now facing higher borrowing costs, which could price many out of the market. Those with adjustable rate mortgages will see their monthly payments increase, adding financial pressure. The 7% threshold is a psychological barrier as much as a financial one. It signals a return to a higher rate environment with significant impacts on the housing market. As rates continue to climb, it remains to be seen how both buyers and sellers will adapt. The recent surge in mortgage rates is not a standalone event. It's the result of a confluence of factors, each adding upward pressure on borrowing costs. U.S. Treasury yields have been on an upward trajectory, closely followed by mortgage rates. This surge in Treasury yields is a major contributor to the rise in mortgage rates. Adding fuel to the fire is the resilience of the U.S. economy, which puts upward pressure on interest rates. The Federal Reserve's monetary policy is another key factor, with recent signals suggesting a more hawkish stance on inflation. This has led to expectations of further interest rate hikes, which are being priced into mortgage rates. Finally, inflation remains a persistent concern, further contributing to the upward pressure on interest rates. Understanding these drivers is crucial for navigating the current market environment. The surge in mortgage rates is sending shockwaves through the housing market. Higher rates translate into larger monthly mortgage payments, making it increasingly difficult for potential homebuyers to enter the market. The affordability crunch is particularly acute for first-time buyers, already facing high home prices and limited inventory. Many potential buyers are finding themselves priced out of the market altogether. Home prices, while showing signs of moderation, remain elevated. The combination of high prices and high mortgage rates is creating a perfect storm for affordability issues. This is leading to a slowdown in the housing market, with sales declining and inventory starting to accumulate. The affordability crisis is a national issue impacting both urban and suburban markets. The dream of homeownership is becoming increasingly out of reach for many Americans. This has broader economic implications, as a slowdown in the housing market can spill over into other sectors. The situation is further exacerbated by the fact that home prices, while showing signs of moderation, remain elevated. Amidst the gloom of rising mortgage rates, there's a glimmer of hope. Mortgage applications have seen a recent uptick. The Mortgage Bankers Association reported a significant rise in both purchase and refinancing applications. This unexpected surge has left many analysts scratching their heads. The MBA figures are seasonally adjusted, taking into account the usual ebb and flow of mortgage activity throughout the year. The recent surge in applications could be attributed in part to seasonal factors. Despite the recent rise, purchase applications are still down year over year on an unadjusted basis, suggesting underlying demand for mortgages is weakening. The rise in refinancing applications indicates some homeowners are taking advantage of the opportunity to refinance before rates potentially climb even higher. The recent surge in mortgage applications, while encouraging, should be interpreted with caution. The true test will be whether this momentum can be sustained in the coming months. The U.S. housing market is at a crossroads. Soaring mortgage rates, fueled by a complex interplay of economic forces, are reshaping the landscape. Affordability concerns are mounting, pushing homeownership out of reach for many. Yet, amidst these challenges, there are glimmers of hope. Mortgage applications have seen a recent surge, albeit driven in part by seasonal factors. The road ahead for the housing market is shrouded in uncertainty. Much will depend on the trajectory of interest rates. If rates continue to climb, the affordability crunch will worsen, potentially leading to a more pronounced slowdown in the housing market. Conversely, if inflation shows signs of abating and the Federal Reserve adopts a less hawkish stance, mortgage rates could stabilize or even decline, providing relief to potential home buyers. Navigating this uncertain terrain requires a cautious and informed approach. Both buyers and sellers would be wise to proceed with caution, carefully weighing the risks and opportunities presented by this evolving landscape.